needed it because the little buggers kept running out. They got their money's worth out of me. Right. We've got one session left to go. Lots to get through. And just to keep you interested and sitting in your seats until the end, we are going to be drawing that bottle of Grange as well. And you need to be in the room to get that, because I want to see the excitement. And if you're feeling a bit of potential largesse, we'd love you to pop the cork and share that as well. You probably won't because it's worth $1,000, but it's always worth a try. Now, this time last year, I did ask the question, how many of us in the room had an EV? So let's have a show of hands at this point. How many of you have an EV now? You've got 2. You really don't want to say that because there's other people blooming waiting in line. So 1, 2 in the one house, 3. Anyone else? It's gone down. Well, that's not right, is it? Everyone else is obviously standing outside, still having a chin wag and eating the rest of the orange and almond slice. There we go. All right. Interesting though. Right. We're going to start up today with a gold exploration company that has now added rare earths to their portfolio due to a recent discovery that has made them particularly happy. Leading us through Asra's discovery and what they intend to do with it, I'd like you to welcome, please, Mr. Paul Summers to the stage. He's the Executive Chairman of Asra Minerals. He has a very long list of letters, etc., behind him, but he's here today in his role as Asra Minerals day-to-day management and governance. Would you please make him welcome?
Thanks, Christina. First of all, I'm not a geologist. I'm the Executive Chairman. And I want to give you a little bit of a story about Azure because it's a fairly new name and many of you may not have heard of it before. The company was originally Torian Resources. It's been a company that's been around for a long time, in excess of 30 years. Before Torian, it used to be Clough Minerals. Gold exploration company, active gold exploration in the Leonora area since around 2016 and held a substantial amount of ground throughout the goldfields of Western Australia. I came in 2018 and tried to dispose of a lot of the ground because the company really couldn't afford to retain all of it. Concentrated on the Leonora area, undertook a fairly active exploration program from really 2019 onwards, and we've continued with that exploration program until the present time. However, in November last year, and not looking for rare earths, and I can tell you that I didn't know much about rare earths at all, and probably a lot of people here don't, but we had a major discovery. My exploration manager and myself were walking the ground at a place called Stirling Central on our ground at Leonora, about 20 kilometres north of Leonora. And we came across some very unusual ground, different to everything else we had out there. My exploration manager used to work for Northern Minerals. He was one of the early geos on the Browns Range project. We had heavily drilled this area for arsenic indication. We were looking for gold. Arsenic is as an indicator with our PXRF guns for gold. However, this area, which we had substantially drilled, really was showing no reasonable arsenic readings, and we were about to abandon the program. My exploration manager looked at this particular unusual ground, hit it with a PXRF, got a high yttrium reading. He explained to me that yttrium is an indicator of rare earths, and we started looking at the thousands of small bags we had out there of the drilling campaign, which we were about to abandon. And on examination of those bags, we were getting high yttrium readings for most of them. Started sending the bags off to the labs, and the rest is somewhat history. So as you can see on the opening page, we've called it, we've bannered it the rarest of the rare, and I'll explain that to you. But I do reiterate that we were not looking for rare earths. It wasn't a target of ours at all. It was purely by chance. And sometimes these things can happen by chance. So the ground that our rare earths discovery is on is 100% owned by Asra Minerals. It's in Western Australian Eastern Goldfields, 20 kilometres from Leonora. And as many of you would know, it's one of the world's most prolific and safest mining jurisdictions. Unusually, it's pretty well underwater at the moment. So we're close to existing mining infrastructure, and most of you will recognise King of the Hills, Red 5's King of the Hills. They have the ground abutting our ground, so what you can see in grey there is pretty well all Azure ground. A lot of what you can see on that map identifies gold targets. However, aside from that, you'll see two areas in green in the middle, Wishbone and Yttria, and I'll get back to those shortly, but they are the two deposits that we've so far discovered in respect of the rare earths. So there's many advantages for us with this location. We've got an abundance of water. We're on the Tarmulla aquifer. We've got the Goldfields Highway running right past our ground. We've got rail within 20 kilometres to the Leonora township. And obviously there's an experienced mining workforce to draw on from that area. But the other important point is that we actually own the pastoral lease covering the entire project. So should we be fortunate to bring this project to fruition, we've got easy access to water, and we also have the advantage of less statutory hoops to step through in relation to being the pastoral lease owner. So what did our assays reveal? So Mount Sterling's rare earth deposits contain an extraordinarily high ratio of heavy rare earths to light rare earths of about 65%. That's really the highest ratio seen in this country, and really the only one that we know of that's comparable is the Browns Range project, where my exploration manager formerly worked of Northern Minerals. So what we found from our mineralogy is that we have the 5 most critical rare earths: dysprosium, terbium, europium, neodymium, and yttrium. And obviously that very high ratio. So Mount Sterling's rare earth deposits are also very unique in that we've got virtually no traces of uranium or thorium. So we have an avoidance of those issues of dealing with the nasties of radiation when processing and transporting. Obviously, it reduces our costs of extraction. So the current strike of our rare earths, the mineralised corridor, is 5.4 kilometres by 1.3 kilometres. And the size is only limited by the drilling today. We estimate that it's actually much, much larger. So aside from the rare earths, we also have significant levels of highly valuable scandium. We have scandium, we have cobalt, we have gold and a nickel, all coming up in our assays. And that's just in this particular area. It's pretty exciting. So for many of you, scandium might be a new term, and in the broking area, I know it has been referred to in the past as scandium, because it's something that's very limited in resource around the world. It is avoided when possible because of its cost. I think the last time I looked, it was around $24,000, I think, a kilo. The issue with scandium, and if you read up on it, is that it is becoming much more desirable in relation to the technology advancing with rare earths and metals. It's used as an aluminium alloy additive. It makes, it traditionally was used actually for rockets and fighter jets, but there are becoming many more uses for it, especially with hydrogen fuels, transportation of hydrogen, and also hydrogen fuel cells, for example, in vehicles, require scandium to prevent an attack on the natural metals. So we've had very good results in our rare earths. Well, our grades would be considered mid-grade, but because we are close to surface and because we have a very unique occurrence, the grades from an extraction point of view are very, very good. I'll just give you a moment to have a look at our grades. And there is a lot of information to come out because this has been a very extensive drilling program and very advanced. So to give you an idea of the way our structure looks, essentially the brown is crust. The grey above is the scandium and cobalt. Now the scandium and cobalt is homogeneous, and over that 5.5 kilometres that we've so far identified, it is consistent, both in grade and in existence. The green that runs between is the rare earths. So it's the rare earths occurrence, which thickens and then reduces and thickens again. It's not as consistent as the scandium. And then after that, again, we go to the grey, which is the scandium and cobalt. This is a very, very large scandium cobalt deposit. And as I said, it's homogeneous. It continues right throughout the area that we have so far drilled. So it's shallow soft host lithologies, and we identify it as being very easy to mine, especially considering it's in the first 20 metres. So the point we find ourselves today is that we have advanced our process substantially. We've finished mineralogy, and we are expecting to receive today our first pass metallurgy. From the consultants that we have on board, which I'll discuss later, we're informed that processing of our rare earths may be done relatively cheaply with a very low level of acid. Certainly our initial assaying has revealed a very, very high rate of recovery of around 70%. So we are very, very unique. Our structure has already been processed naturally. It's occurred through weathering, and that's why we are so unique. We're not in hard rock. We're not an ionic clay. Our rare earths have been broken down from a hard rock source and are now supergene enriched from surface. We know of no other occurrence like that at the present time. So our rare earths also appear to be associated with manganese oxides, potentially making extraction much easier and much cheaper. And we've assembled a good team to assist us. We've got Professor Ken Collison, who's been working in the area of rare earths at the University of Queensland for over 18 years, and he is consulting to quite a few companies throughout Australia. We also have Gavin Beer, whose photograph I've seen with quite a few companies this morning and this afternoon. He's a metallurgist consultant and is working for the company. Matt Longworth, is my co-director, a non-executive director at Azure Minerals, and very experienced also in the area of scandium and gold. And then my exploration manager, Claudio Sheriff-Segas, who I can hold responsible for this discovery. Okay, so there's a lot of news to come out, and it's coming out in the short term. We're receiving results from over 10,000 metres of drilling. Metallurgical test work is coming out, we understand, today, so we can expect an announcement very, very soon. An interim maiden resource is expected in Q4 this year. We expect that will be at an indicated level. And subject to positive metallurgical results and proven initial scale of the project, we will begin feasibility studies and explore potential offtake partners in 2023. And whilst looking to grow our resource with extension drilling, we've already got approved 50,000 metres of drilling. So the reality is that Azure is entering a very, very exciting period. So Azura's Mount Sterling rare earth project is very rare. There simply aren't many comparable projects on the planet. We've got a high ratio of heavy rare earths to total rare earths, approximately 65%. We're close to surface in soft regolith, virtually no uranium or thorium. We're in a tier 1 location within existing infrastructure on Azura's own pastoral lease. But don't forget, we're also a gold exploration company. We've currently got 152,000 ounces of resource, and we're continuing to work on that. Thank you.
Oh, look, everything. Is that better? Okay, hi, fine, right. They try and tether me down to microphones. I don't like sitting down, as you may have noticed. But look, this fellow here, who's making his way up onto the stage, we're going to talk about silica now, because global stocks of silica sand, which is the primary ingredient for glass and concrete, and that, of course, is the building block for our modern cities, if you like, are being exhausted faster than we can discover them. So the question I'm going to pose to you today is, oh, do you want my clicker? Hello, there you go. Does WA have the solution, or at least part of the solution? Would you please make welcome Mr. Bruce Maluish, the Managing Director of VRX Silica. Please make him welcome.
Thank you, Christina. There's a disclaimer there. Silica sand. I want to talk to you about silica sand, and then I'll talk to you about a couple of our projects. Silica sand is the most used commodity on the planet after water. 50 billion tonnes a year. Now, over 49 billion tonnes are used in concrete, and therein lies the problem. At the moment, all the stimulus spending that's going on in Asia is predominantly infrastructure and predominantly concrete. Now, the concrete manufacturers are using up silica sand at such a rate, Asia is running out of sand. Now, the glass makers who need silica sand are not getting the opportunity to even get a hold of any silica sand because it's going into concrete. So even sand that could be beneficiated up to glass quality, they're not getting a look in. Now, the number of products that are made out of silica, you'll be amazed. You're surrounded by it, not just the screen I'm looking at here, the LCDs, paint, filtration, plastic. Even the little plastic bottle's got a bit of silica sand in there. Your tyres on your car, you'll notice nowadays it says silicon rubber. Not much latex in rubbers in tyres these days. Plastics, paint, containers, container glass, and the big one that's moving at the moment, solar panels. So we'll have a talk about the quality you require to make solar panels. So VRX Silica pivoted into silica sand in 2017, and I did that at the time because I read an article, I think it was The Economist, which said that China had made silica sand a strategic mineral. So I put it in the same bag as uranium and rare earth. And I was like, what the hell? Yeah, there's got to be silica sand everywhere. And you think deserts, think beach. That silica sand is not suitable for making concrete, and it's not suitable for making glass. You need sort of silica sand that's been derived from granites, preferably. So we've got 4 projects here in Western Australia. Of course, we know, this destination is probably the best place in the world to be mining anything. These are multi-decade contiguous and very significant high-grade silica sand resources. And we're easily the most advanced. We've got into this a number of years ago. We've done an enormous amount of test work. In fact, we've got a patented flotation process, which has replaced spirals. And permitting and infrastructure agreements, we've had a number of those in place for a while. So we've got mining leases granted over 3 of the projects. Arrowsmith North is our leading project, and that'll be followed by Mewshay, Arrowsmith Central and Boyatup. Mewshay, obviously only 50 k's north of Perth. Arrowsmith, but sits between Eneabba and Donga, about 270 k's north of Perth. And that'll get exported out of Geraldton. Mewshay will get exported out of Kwinana. And we've got another project about 100 k's east of Esperance. Our Arrowsmith and Mewshay projects are right next to existing infrastructure, Brand Highway, gas pipelines, railway lines. So, and we're getting an enormous amount of interest out of Southeast Asia. I think we've got over 65, probably closer to 70 nowadays. I'm getting inquiries weekly. Every Asian country has banned the exports of silica sand. They're all concerned about their own domestic supply. Now, Australia is uniquely positioned, particularly WA, because the Swan Plain has got plenty of silica sand. Not easy to get to, but there's plenty there. So we've got an enormous amount of interest. So it's out of the first 65 companies that have given us a letter of interest or an expression of interest, 45 are from China. We're ignoring them for the moment. But these are very long term. We've got over 1 billion tonnes of silica sand. So these projects will be in place for 100 years, once established. The company, we've got about 550 odd million shares out there. We're market capped at about 87 million. We've got about $8 million in the bank. We're not spending a huge amount of money at the moment. Mostly we're in the EPA process. We have started buying some gear, but we're mainly in the EPA process, which doesn't cost a lot of money. It costs an enormous amount of time and frustration, but we are moving ahead with all those. Very experienced board, stockbrokers. I've had about 40 years in the resources industry. We've got executives out of finance and corporate, and also logistics, and a commercial manager who happens to be here today. But Yunil Kim, he's our marketing manager. He's based in KL. He's been selling silica sand for 17 years. We're WA based. Each of the projects is subtly different. And because they're different, they actually go into different markets. So we're not developing projects which will compete with the other projects. So we're looking for completely different markets. Now, even a subtle change in the quality of the silica sand determines, even if it goes into the glass market, it could go into flat glass, automobile glass, container glass, or with the Mewshay project, if you can get the sand at a high enough quality, you can go into the ultra clear glass market. And that's growing in an enormous amount because that's the piece of glass that goes over top of solar panels. And the demand for solar panels, this particular type of glass is probably growing at about 30% per year. As you can see, there's solar panels just appearing everywhere. And if the world's going to get anywhere near carbon zero, they're going to need a lot of solar panels. Arrowsmith North is our first project. We're looking to commence production in 23, subject to environmental approvals. We're well down the track with that. We're all but. We're about to get published, we hope, in the next few weeks for the ERD, the Environmental Review Document, which is the last document we lodge. Probable reserve 223 million tonnes at 2 million tonnes a year. It's going to last more than 100 years. And we've done the process circuit design, and we've engineered a 2 million tonne per year plant. Established infrastructure, We know there's water at the Yarragadee North. We've drilled a bore. It's 400 metres down, but it's got an enormous amount of water. So we've got plenty of water there, and you need a lot of water for these projects. We're also right next door to a gas field, and we're looking at opportunities there to use gas to straight out of the gas well to produce the power we require. We lodged the environmental review document on the 14th of April. EPA assured us that it'd be reviewed by the 10th of June. We're still waiting. Unfortunately, we can't push on that, but whenever we get a response from the EPA, if we get a written response, we announce it, but we haven't heard from them for a while. Arrowsmith Central, there's sort of three stages to the environmental process. There's a referral, a scoping document, and then a review document. Arrowsmith Central is having the second stage, the scoping document being assessed now. But we've developed a technique called vegetation direct transfer, whereby we take a sod of earth out in front of where we're mining, and we put it back to where we've already been mining. It's the best technique known for restoration that's been well established by, in fact, the Silica. But you can imagine there, what we're mining here is loose sand. So the root systems on these trees and shrubs and sedges only go down about 200-300 mil. We're coming along taking a 3 metre by 3 metre by 400 mil sod out. So we keep all the root systems and in fact, the invertebrate fauna, we keep it all intact. And we've trialled it, and we're about to start a trial actually at Mouchet. Mouchet is a little bit different. It's at the first stage of the EPA approval process, but, and I'll show you a photo in a minute, the bulk of the shrubs here are also very small. There's some bigger Banksia trees, which are easy to propagate. But established infrastructure, railway line to Kwinana, we're on grid power there. We also have 2 gas pipelines running through this project as well. Next to Brand Highway, it's a granted mining lease, but here we can produce silica sand, 99.9% silica dioxide, and more importantly, less than 100 ppm iron. Now, iron is the enemy when you start making glass. So you need to get below 100 ppm to make ultra clear glass. And that's the market we're aiming for here at Mouchet. So we've got the potential here. I think there was an article in the paper just last week which said that the LNG in Perth now is the cheapest LNG in the world. Now, 80% of the cost of producing gas is energy. So we've got cheap gas, we've got the main ingredient for making silica sand, and as it happens, a couple of the other ingredients are also available here in Western Australia. We would like to be making glass here in Western Australia, and we'd really like to be making solar panels. So that's where that's our goal ultimately. Mouchet, most of the bushes, the sedges and the grasses are the same as Arrowsmith North. The bigger trees, the Banksia menziesii, they can be easily propagated and we can plant those. It's a simple flow sheet, really. It's mainly screening, but one of the keys here is attritioning. Attritioning is an agitated cell, an agitated slurry where you've got sand grains rubbing on sand grains, and it polishes each of the sand grains. The rest of the process is just getting rid of the fine material that you create by polishing these grains. So it's a fairly simple process. A process plant, we actually costed this up in 2019, and it was about $30 million. It's going to cost more now. Price of steel, it's hard to keep up with it. So it'll be more expensive, but we're in the process of redoing our CapEx. This VRX is this VDT. It's a modified bucket on a front end loader. It's ridiculously simple, but great results, and more important, you don't have to go back and reseed any areas. You get 80% of this vegetation gets back in 3 years. We take our ESG responsibilities seriously. And if you're in the planning stage like we are now, we're able to address a lot of the sustainable development goals. So cheap power from and low emissions gas, and we work well with the Aboriginal communities up there. We're looking to establish a ranger program, mainly to go out there and shoot all the damn cats and foxes. So we think we're in the right time, the right place. Australia will become, it is already a major exporter of silica sand, but from Cape Flattery in northern Queensland. Western Australia will become a very large supplier of silica sand, particularly to Asia. So we've got over 1 billion tonnes, so we're going to be around for a while. We've got Alan Carpenter in 2013. He put in place domestic reserves for gas. All the governments in the eastern states had killed for that. He was castigated for it when he put it in place, but he's a hero now as far as I'm concerned. We've got a long-term supply of essential raw materials. Where our projects are, the area from Lanceland to Dongara or to Geraldton is going to become renewable, as in wind and solar, and hydrogen central. And we're going to smack dab in the middle of all that, and we can take advantage of hydrogen. Nippon Sheet Glass have already, in their Pilkington plant in UK, have already made glass using hydrogen. So technically, it can be done. The opportunity here for ultra clear glass production from Uche is very good. And what we'd really like to be doing is making solar panels. We get good support from the state government, and recently we had some meetings with the federal ministers, and they're keen as hell for us to make solar panels here, particularly concerned about the supply from China and the sovereign risk involved in that supply chain. But thank you very much.
Thank you so much, Bruce, and I'm sorry for the electrical cock up at the start there. My apologies. So thank you very much for your patience. Thank you all for your patience too. Do you know if you were here this time last year at 4:30, do you remember who was presenting? If you'd invested in them, you would have made a little bit of money. It was Pilbara Minerals in this slot last year. Coming up next, we've got Charger Metals to the stage. And since listing, Charger's geoscientists have generated quality new drill-ready targets on each of their 3 company projects. And this year, 2022, has been and continues to be a very exciting year for the company. In charge is this fellow, MD David Crook. He's an experienced geologist and managing director with over 40 years' experience, which has been gained predominantly here in WA. He's usually ahead of the curve. In fact, he was one of the first people to recognise the potential of lithium mining here in WA. So would you please make him very welcome? He knows his stuff.
Very kind comments, Chrissy. And while we're in the lithium business pretty early, I suppose we haven't seen the success of Pilbara Minerals and a few of the others. But the Charger story, I suppose, does go way back there. We were fortunate enough to be able to acquire the lithium projects from Lithium Australia, which was one of the first movers. Lithium Australia saw themselves moving into technology. Adrian Griffin's in the front here if you want to quiz him about that. He's very good to talk to about that sort of thing. But they were really first movers in a lot of these things. And as a consequence, we managed to get a couple of projects that are quite advanced now. They do require drilling. And so I suppose the story today is one of warehoused projects that are now being, or having drilling applied to them. And let's see what we can get. So from our point of view, we listed just over 12 months ago, as Chrissy said, we are well funded. We've still got pretty close to $4 million in the bank. We say that we've got a tight capital structure. In fact, probably 40% of our shares are held either by Lithium Australia, Adrian, or in escrow. So we've got a very small pool of shares that are available to trade. We've got well-positioned projects. We heard from Simon Kidston earlier today about his project being adjacent to the core lithium project. Our tenement at Bino is smack in the middle of it. So we'll have a look at that in the middle. in a minute. We're lining up to start drilling out at Lake Johnson as soon as we can, hopefully within 6 weeks. And that has spodumene sticking out of the ground. Spodumene, well, you would have heard it a million times, it's the preferred lithium mineral. And just out of town at Baker's Hill, we've been drilling the Coates intrusion there. We finished drilling that a couple of weeks ago. So let's have a look at the company. We are also very pleased. Linda, sponsors of the conference here today. Linda on our board, on our register. Gunsynd and Ausbil. So we do have quite a strong institutional support from around the world. So let's take off where Simon Kidston left off. Simon was talking about drilling in this area here. This is the core lithium area. They've got 18 odd million tonnes. They're going into production at the moment. We've got this ground here. So we're entirely surrounded by a $1 billion company. The geophysics that we've done there suggests that there's continuity between the rocks on their side of the fence and ours. We managed to get some data sets that had been explored for tantalum previously, so that gave us a head start. We've been out and done our own targeting, geochemistry and whatnot. We'll have a look at that, in fact, there. So we've got really good, strong lithium anomalies here. This one here, if you follow the geophysics through, goes to the Ahoy. We'll have a look at that in a minute. The only thing now that's holding us up from drilling here is our heritage protection survey. At the start of the year, we were told it was 150 days. Well, we were probably at close to 200 days and we still haven't received it, but it's imminent. And as soon as we get that, we plan to start drilling here, obviously drill here, which is a very big target, and some interesting ones in here as well. So as soon as the heritage is done, we're ready to drill. This one here is just a shot of the same area. You can see the pegmatites here. They stick out of the ground. Unfortunately, in this environment, the spodumene is gone, but you do still get a lithium signature around the pegmatites. That's comments we've heard from other people that work for Core Lithium or other companies. It's just a constant in this area that the spodumene in the top 30 metres is gone. These are the structural interpretations, both from geochemistry and geophysics. And these are these trend lines, as we say, that go straight into the core lithium ground and eventually into Simon's ground as well. And core lithium abilitas and Ahoy, they are getting good intersections of good grades. And just saying it again, these same structures come through into our ground. So we've got very high hopes for when we start drilling here, we're going to see some spodumene pretty quickly. The second one, and this is our lowest risk project, is the Metcalf Prospect within our Lake Johnson area. Lake Johnson is halfway between Perth and Kalgoorlie. It's famous more for nickel in this area here, but one of Lithium Australia's geologists discovered spodumene at Metcalf. It sticks out of the ground. There's a big swarm of them over 500 or 600 metres. Quite a nice geochemistry anomaly sitting over the top of it, and it's just waiting to be drilled. There were some environmental issues out there. We've got our botanist out there today, and then we're getting the Aboriginal heritage work done later this month. And again, as soon as that's done, we can put in our POW. 4 weeks after that, we should be drilling. We've already engaged our drilling rig. We're presuming we won't have any problems. So the main problem in that area is just it's been a very wet winter, and so the bog holes are everywhere. As soon as it's dry, we can go drilling here. So we'll have a look at that. This area is also had attention drawn to it, covalent, just off the map. It's got the Earl Grey deposit, and that's one of the biggest hard rock deposits in Australia. So this area is capable of throwing big lithium mines. We completed a lot of geochemistry. We've got some nice lithium anomalies up in this area, which require more work. This area here is where the spodumene is. We've extended our anomalies here, but these are some of the rocks. The white minerals within this outcrop are spodumene, and whilst that's well and truly out of focus, that rock there is largely spodumene. We've had assays of individual crystals up to 7%, but commonly sort of rock chips over a period are running, 1.5 to 2%. So that's the kind of grade that we'd expect to see in the drill core. This is the swarm of pegmatites in this area. So that's about 500 metres long. The anomaly continues out in this way. That square box there is this square box here, oblong. You can see the very high grade spodumene samples. This was quite coarse sand fraction, so it would have been spodumene samples. And then the anomaly heads off in this direction up here. So our plan here is to drill 3 lines across the middle and step out 160 metres, one through there, and let's see what we get. So as soon as we see some spodumene there, we'll get a core rig out. So there'll be some nice photo opportunities because there's nothing better than spodumene core. It's beautiful looking stuff. This is the more northern area, Mount Day. So all of these are known pegmatites, and this is a lithium anomaly. These are really wide spaced lines at the moment. And so there's quite a bit more mapping and just preparatory work before we go drilling here. These things are all big flat lying sheets. They're quite bizarre, but these things didn't get parachuted in. There will be a source for these flat lying sheets, and it's often that source rock is where the spodumene occurs. This one up here does have lithium minerals sticking out of the ground, and that will be part of our drilling program. Where we've just finished drilling now, it's a step away from lithium. Julimar, as you know, is just out of town, and it's been well and truly in the news. 20 odd kilometres away, we've got part of the Coates mafic intrusion down here. We had the benefit of some aluminium work, and we assayed the bottom of those holes, and we managed to get a nickel, copper, platinum group element, gold, arsenic anomaly, which is all of the hallmarks of a Julimar system. We then flew VTEM, so helicopter-borne EM survey, and got some anomalies in this area here, and that was coincident with where the best of the geochemistry was. And we subsequently did some more work, and we announced the completion of 4 diamond drill holes the other day. So we've completed 4 holes out there. Some of the holes encountered sulfides such as pyrrhotite and pyrite, a bit of accessory chalcopyrite. The style of mineralisation out there, you really can't tell too much what's in it. We certainly own an XRF, so we've been shooting assays, but really that's only good for picking your rock types. It's no good for platinum, and it's no good for the style of nickel that other companies have discovered out there. So we're just awaiting assays. It's as simple as that. Very nice, neat, tidy diamond rig and solids recovery unit. So our mess was very well contained, somewhere close to Perth. So that's the SkyTem anomaly there that we drilled. So we put 4 holes into that. There are other anomalies heading off north of the page. Depending on what we get here, we'll progressively work through these. There are some, because it's so close to town, there are some other issues working out there, but we managed to get on the ground there with a very happy farmer, and we're hoping for the best with regard to the results. So just winding up now, Charger listed just over 12 months ago. We've got some very supportive shareholders that are international, and so we don't see a lot of movement in our stock. We have, I believe, well-credentialed industry people within the company. We've partnered up with an exploration group to help us manage the exploration around the place. We've got 3 very good projects. Bino, which is in amongst the core lithium ground. All we're doing is waiting for our heritage protection surveys, and then we can start drilling there. Lake Johnson, most of our approvals are in place. We just need the final ones, and we can start drilling there. Hopefully both of those will be drilled next quarter. And the Coates Julimar lookalike, if you like, we're just awaiting our first assay results from our 4 core holes. So that's Charger's story. Thank you very much.
Thank you. No, I wasn't aware, having a look at our next presenter on stage, that in Australia at the moment, we only have the 1 tin producer. I actually thought that we had more than that, but we actually only have 1. And our next presenter up on stage aims to be the 2nd. And as they navigate the various challenges I reckon the timing couldn't be better because not only is tin in high demand, there's a little bit of geopolitical argy-bargy going on at the moment. Yeah, there's some reports out that Indonesia is looking to ban exports of tin concentrate. So that could provide Australian tin producers with a nice little market that is very, very hungry for the tin concentrate. So let's find out about the project that may be poised to capitalise on such a decision, Venture Minerals, and driving the project with more than 35 years of experience in both mining and exploration. Would you please welcome Venture's MD, Andrew Radonjic.
I think I might just leave it at that, Chrissy. You've done the job quite nicely. Thank you very much. Again, good afternoon, ladies and gentlemen. Obviously, we're in the graveyard shift here, but it's great to be here again on this Perth instalment of the New World Metals Investment Series. And thank you again to Vertical Events for putting on yet another successful conference. Today, I'd like to talk about our flagship Mount Lindesay critical minerals project. And critical minerals, I mean the form of tin and tungsten. We're located in the northwest of Tasmania and also in Chalice Mining's JV activities at our Southwest project here in WA. The advanced previously mined Mount Lindesay Tin Tungsten project has already had $40 million spent on it, more than 100,000 metres of diamond core drilling, completed an open pit feasibility study in 2012, and is one of the largest undeveloped tin deposits in the world. The project's already located in a Tier 1 ESG jurisdiction that already has reached net zero emissions with access to renewable energy with hydro and wind power going through our project. This is at a time when tin prices are strong and over 3 times the price of copper. Tin unmistakably is an EV metal and certainly the time that tin is now. Just going through the disclaimers there. The venture commenced a new underground focused feasibility study earlier this year, in fact, probably late last year when we started collecting 10 tonnes of metallurgical sample from our new drilling. And this is done to verify a new, more simplified processing route. We're targeting to put out a PFS on the underground towards the end of this year. This will see a new mine design with a greater than 80% reduction in the footprint using battery electric driven equipment and placing all tailings and waste rock back into a mine that was previously started over 100 years ago. We've got also, what we commenced before that metallurgical drilling last year, we started doing some exploration drilling for the first time in about 8 years. And we had immediate success with the first 2 holes we drilled. We got an extension to Mount Lindesay and we found some very exciting mineralisation and alteration along strike from Renison Bell. As Chrissy said, the only tin mine operating in Australia. Chalice Mining have just recently, about a month ago, elected to go to stage 2 of our joint venture, where they'll spend another $2.5 million in 2 years. And I'll talk about it a little bit more. So that's to go additional 19% interest in the project. The Riley Iron Ore mine remains on care and maintenance and is ready for a quick restart should the conditions change more favourably in terms of freight costs and also price. We're doing a little bit of work at Golden Grove North and at Coolin, but I won't elaborate that today. The market cap of the company, it's around that sort of $45 million mark. We were listed back in 2006, so the company's over 15 years old. Current cash position was a healthy 9.4 at the end of June this year. And our top 20 shareholders include Dale Elphinstone, who's Tasmania's highest net worth individual. And so he's a big supporter of the company. And Singapore Fund Republic was holding at one stage over 15% of this company, exited during COVID. The guys did quite well out of it, to be honest with you. We're selling at 15 cents share price back in the middle of last year. They came back in and put another $2 million to cornerstone the investment, or the raising, at Christmas time this year. The team's been with us since the beginning, and that's been the core value and asset to venture. So once we were able to sort of get back onto when the iron ore price went up for Riley and the tin price went up, we're able to sort of swivel back onto these assets and get on moving, having done a fair bit of good exploration work in WA. So like I said, today I'll focus mostly on Mount Lindesay and a little bit on the Chalice activities on the Southwest project. Now here we are in northwest Tasmania. This is where the Mount Lindesay and Livingston and Riley projects are. And a lot of people don't probably know about this. It is a mining industry, in fact, very buoyant down in Tasmania, 140 years of mining. Some of the great mines, Mount Lyell, Rosebery, Renison, as we've already spoken about, Savage River, Australia's only magnetite mine, the King Island Tungsten mine, which was just restarted with the help of Dale Elphinstone through funding. And it's a great address, you know, for mining and high prospectivity and great opportunity because the terrain is hostile to humans getting out there and getting into it. So I think there's great opportunities there. But having said that, back in 1914 at Mount Lindsay, they found cassiterite, panned it up the creek. That's them mining in 1914. As you can see, there's not many trees standing. This is another project just to the west called around the Stanley River near Livingston. And that was a source of alluvial and hard rock mining back in the day. So you can see it's the gentleman standing there with his nice coat there, listed on the Tasmanian Stock Exchange back in 1911. So fair bit of history there. Now a little bit about tin. And, you know, here's another, you can see that in terms of tin, the biggest use is solder. Now, solder was sort of 60% tin and 40% lead for a long time. And about 10 years ago, they said we wanted to have lead-free solder, and that's sort of like 75% done. That's 96% tin and 4% silver. So solder is the glue that connects everything electronic. Your mobile phone will not work without tin. Simple as that. And your phone contains about 3 cents worth of tin. So the price goes up to $100,000 a tonne, i.e. 12 cents. It won't make any difference to the price of your phone. So as we go through this decarbonisation economy, everything becomes electrically based. You're going to need tin for every aspect, laptops, screens, monitors, everything electronic has got tin in it. Solar panels, tinned, copper to prevent corrosion of copper wiring. So, you know, very much synonymous with the revolution that we're sort of going through, the fourth industrial revolution at the moment. And further uses of tin include the 5G network. We're going to roll that out, and they're going to require plenty of circuitry there. Electrical vehicles require 5 times as much tin as a fuel combustible vehicle. We're going to need another 30% more tin demand by 2030. I don't know where that's going to come from. And you, by the way, talking about electric vehicles, your charging stations hold about 1 kilogram each of tin. So, and the new technologies for tin continue on to improve the efficiencies of lithium-ion batteries. It's in the anodes of lithium-ion batteries as well as lead-acid batteries. So like I said before, very much an EV metal. Wood Mackenzie put out a report April last year. You know, geopolitical risk is high on the agenda with this sort of Cold War between China and the US going on. But if you have a look at tin production, you can see that it's a bit of a nasty bunch there. China, Russia, Indonesia, Egypt, Brazil, Bolivia, Congo, Myanmar. So that's why there's a huge geopolitical risk on tin. Half the world's tin is alluvial. That's not responsibly sourced. The Indonesians are digging up the seafloor bed and no one's stopping them. So if we want responsibly sourced products, then we will need to buy tin from developed countries where there's governance and permitting, etc. So hence, Venture is very well placed with a tin tungsten mine sitting in a jurisdiction with new renewable power. So that's where the value proposition is for Venture. And the Indonesians are very much looking to do exactly like they're doing with nickel. So they produce 25% of the world's tin, China 45% of the world's tin. They're looking for funding to go downstream. Like with nickel, China will fund that and then they will control tin. So like 70% of the market probably within the next 10 years. When that happens, we'll be struggling to get our tin like we do our tungsten and our rare earths. So obviously we're clearly going to be doing something about that. Now a little bit about tungsten. Tungsten is very much like a rare earth. Like I said before, it's controlled by China. You need it. It's a warfare weapon. You need it for armor piercing, armor plating bullets. It's used in semiconductors, filaments, hard wearing plates, tungsten carbide drill bits. Very special mineral, especially mineral, strategic. The US had a stockpile. They sold it when the Berlin Wall went down. They're now regretting that. So they'll be looking to stockpile that. So this product, the tungsten and the tin, again, critical minerals on the US and the European lists for critical minerals. Mount Lindsay is blessed with both of those. It is truly a co-product. Tin and tungsten produce about 40% of revenue each. Magnetite does the other 20%. Like I said before, we've got one of the largest undeveloped tin assets in the world, with over 80,000 tonnes in resources and 3.2 million metric tonne units. That's a third of a King Island project sitting in the same rock, as well as 15% of rock being magnetite, which is be produced at 65% Fe. Some of the grades there in two shoots, the main and skarn, number 2 skarn, the high grade shoots, McDonald and Radford. You're looking at those are pretty much very grades you would see at Renison or at King Island equally. As to resource back in 2012, which we're looking to update into a 2012 code shortly as part of the pre-fees. Some more highlights, like we've done 100,000 metres of drilling. Well, sorry, we haven't done, but we did 83,000 metres. We're already 17,000 before we even turned up. So as a consequence, we drill the high grade out to about 20 by 15 metre spacing. HQ, NQ core, about 83% of the high grade zone is actually measured and indicated. So it's all drilled. We can produce a 75% tin con, and we're using that work we did side of test work in 2014 into converting that into a flow sheet at the moment, which will be a lower cost and lower capital cost as well as lower operating cost. Tungsten price has been very solid. I suppose it's a little bit part of the fact it's controlled by the Chinese, the price. But I certainly see two different markets emerging with China versus, if you like, the rest of the world. So that's a very strong price since 2016 also. A little bit about exploration, and we're just needless to say, we are actually drilling here at the moment, one rig, single shift, 5 days a week. The problem's not rigs, the problem is drillers to man those rigs. So we're looking to get a second rig shortly. Like I said, we had success here. This is the Renison mine sequence sitting here, and we're drilling holes into that along strike from Renison. We had success in this EM target. It looks like pretty much like Mount Lindsay. We drill one hole in that. We'll follow that up shortly. That's a hole from the Met work, 147 metres of percent tin, drilled straight down the chute. You can see it looks pretty good, and plenty of scheelite. Surprise, surprise. Bit about Julimar before I finish up. There we are. It's the reason they made a discovery in March 2020 at Julimar. 3 months later, knocked on our door and said we want to do a joint venture. You can see we're in the same geological terrain. Mag is obviously very, very similar. And we got EM targets in the same spot. We hit massive sulfide 2018, and we got nickel, copper, and cobalt. We were looking for copper, lead, zinc. So a little bit different than what we planned. There wasn't a Julimar to compare it against. We were very happy when I came to do a JV on this, testing this Julimar lookalike concept. And they put 3 holes into an area next to the holes we'd already drilled, and they hit VMS target, which I suppose wasn't totally surprising. But the interesting part about it is they actually come up with a soil program, some nickel, copper, PGE targets sitting above some of our airborne EM anomalies I didn't follow up. So it looks pretty exciting. And what we're seeing is that along this trend here, an ultramafic has been found from historic mapping. So there could be an ultramafic unit running all the way parallel that hasn't been tested. But that indication alone was enough for Chalice to commit to the next $2.5 million over the next 2 years to push the interest to 70%. So I think that's a big tick in the box. And the reason the EM's not covered is the power line. And this is a classic Helia scenario where there's a power line sitting straight top of your target there. So that's why it wasn't known about. So they're pretty much open, brand new targets. There's 2 targets. They'll do the infill once the rain goes away down south, and they'll begin to do the test work to get prepared to drill those targets, I would hope, early next year. And I'm out of time. Thank you.
Thanks, Andrew. Best of luck on that one. Next on stage, we're coming to the pointy end of the day. Great to see the room still nicely packed. Global Lithium Resources, who are aiming to head the next wave of lithium producers out of WA. They're based in 2 of our most famous mineral producing regions, the Pilbara and the Eastern Goldfields, and they have some extraordinary drilling results to the market. And the share prices, of course, has popped accordingly. To talk us through this opportunity and its projects, would you please welcome Executive Director Ron Mitchell, who in his career achievements includes the title of inaugural chairman of the London Metal Exchange Lithium Committee, which is a role that he has held for the past 2 years. Would you please make him welcome?
Thanks, Chrissy. Just a correction there. I am the Managing Director as of April this year, but all good, Chrissy. Quickly, thanks to Chrissy Thanks to Stewie and Jackson for the invitation, putting on another fantastic show. It is late in the day. I am going to get a little bit controversial here, ladies and gentlemen. Now, for those of you that do remember, Eddie had 3 rules at the start of today's play. Those were for companies to talk about their people, their projects, but don't talk about the market. I'm going to break one of Eddie's rules. I'm going to talk about the market. I think it's important to share an anecdote. If I recite a conversation I had earlier this year, only several months ago, sitting in an office in Phoenix, Arizona, with one of the major tier 1 lithium ion battery players. And the conversation went a little bit like this. Ron, we love hard rock. We love Australia. You tell us what the best offer is you have on the table and we'll beat it. Now that conversation really resonated with me that evening, and you can look at every supply demand forecast chart you like, but that conversation probably just shows how desperate and how tight this market is and how there's no let up in sight. So that really puts us a bit of an opening session and talking a little bit about our company. We listed on the ASX last year, best performing IPO on the ASX last year. So just quickly before I dive into our slide deck, acknowledgement of country, acknowledging the Whadjuk people of the Noongar Nation, and certainly paying our respects to their elders past, present and emerging. It's important to start with our purpose and our values. We're a company that really owns it as it relates to safety and action. And the work we're doing in the field with a fantastic team of geologists is really world class. We keep it simple for our purpose. We're attracting great talent in the form of sort of people, power, planet, and that's really our mandate going forward. So what makes us unique? This is really the company on a slide, and this captures our people and our assets all in one slide, just ticking Eddie's box. So firstly, we're multi-asset. We've got 2 projects in arguably the 2 greatest mining jurisdictions on the planet, being up in the Pilbara, our Marble Bar Lithium Project, and also in the Eastern Goldfields, our Manolithium Project. Both of these projects are JORC compliant. We've got JORC Resources, a combined equity position of close to 20 million tonnes at 1.06% lithium oxide. And that's really just the start for us. We've got an enormous exploration campaign underway, around 80,000 metres at both projects, RC drilling, and about 4,000 metres of diamond drilling. So a lot of upside coming towards the back end of this year. We'll be announcing a significant resource upgrade in Q4. We do have strong lithium industry, credentials. We know how to do deals in this space. We've got a very strong board, and we've attracted a lot of the end buyers across to the company over the course of this year. Strategic partnerships are important. We've got 2 sort of blue chip counterparties on our register, being Suzo TANA. It's the only offtake we've done, so 70% of our offtake remains uncontracted, although, as I mentioned from the outset, the interest is incredible. And of course, Mineral Resources, who have a 5% stake in the company. And most importantly, location. We have assets in the best mining jurisdiction on the planet. So talk a little bit about our people, which make us a class above a lot of our competitors in this space. We've built a board and management team built to take our projects into development and production. So Warwick Hazeltine, more than 20 years capital markets experience, a lot of experience in the energy transition industry. He's helped deliver a number of, advised on a number of lithium projects here in Australia. I've been in the sector more than 11 years. I spent 5 years at Greenbushes, Talison Lithium, and the last 6 years at Tianqi Lithium, heading up their international commercial sales and marketing team. Greg Lilliman, guy needs absolutely no introduction. Greg, 2IC at Fortescue Metal Group, brings a wealth of experience, and his sort of technical horsepower in terms of operational excellence in the Pilbara is something we'll lean on. And Dr. Diamin Chen, a non-exec director, a lot of experience again, operating and running plants both in Australia and Canada. Hayley Lawrence, a non-exec director, her commercial lawyer by trade. She has tremendous experience. She's helping us on our ESG and our approvals process. Kevin Hart, CFO, COSEC, more than 30 years experience working with ASX listed companies. And the guys getting it done on the ground, Stuart Peterson leading our geology team. Stuart has specific experience at the Mount Marion asset. We've got other project geologists, exploration managers who have experience at Pilgangora from Greenfield and also the Wodgina assets. And we're also making a big play in the community relations space as well, for Nicole Stein. So just a snapshot of the company. I'll get through this quickly. A pretty tight register, about 200 million shares on issue, a market cap of about 380, up a little bit as of close yesterday. The register's tight, as I mentioned, the two blue chip cornerstones, Suzo and Mineral Resources. We've got a couple of high net worth individuals, board management with some skin in the game, about 5%, and the balance is retail and insto. Importantly, you know, our share price movement really over the last sort of 18 months has been on the back of real deal flow. We're not just riding the lithium sentiment, we're actually out there executing, and we've got an incredibly ambitious board. Just some recent broker research. Argonaut, Macquarie and Shaw and Partners are covering the stock. Encourage you to reach out to these three gentlemen if you needed to find any further information. I'd like to talk a little bit about the jurisdiction. I think we all get it, WA is important, but what's really critical, and one thing I'm seeing from the industry is there are a lot of projects, if you look on paper, in the lithium space that look attractive, but in my personal view, you know, they're effectively stranded assets because they're missing the most critical piece, and that's the logistics piece. We have the world's best infrastructure as it relates to mining, and this is something the electric vehicle value chain certainly appreciates now. Finally, you know, and I do use this phrase, and I think it's important. The fact that West Australian Iron Ore helped build the new world, and WA Lithium will help power it. And the branding we have overseas as a state is quite phenomenal. And certainly we were very lucky to be able to come in on the back of BHP, Rio, Fortescue, you know, these big brands that have helped create this Team WA brand. And we'll certainly benefit from that going forward. Spodumene is important, speed to market, absolutely. There's 5 existing lithium operations here in Western Australia, more than anywhere else on the planet. That's really important. We'll be able to benefit as part of that next wave of lithium supply, given the experience in our contractors, EPCM partners, and just that technical wealth of experience we have at our disposal here in WA. It's world class. Just quickly, MinRes I don't think needs any introduction, but you know, the key reason they're on our register, there's geological and geographical synergies here, as you can see, in terms of the location of the Wodgina and the Marble Bar lithium project. And down in Kalgoorlie, you can see the proximity of the Mount Marion and the Manor deposits, about 130 kilometres as the crow flies. So MinRes has this incredible unrivaled track record of, you know, bringing projects into production incredibly quickly. And their experience is something we'll certainly lean on at the appropriate time. Suzo TANA, this is a company based in China. This is the only offtake we have. It's a 10-year deal, importantly at market prices. And again, they can give us this fantastic experience and leverage on the downstream side of the business. So, you know, understanding how our products use and most importantly, give us insights into the technology trends in China. And also the market, what's happening in China. It's really important for us. Pricing is not going anywhere, I can assure you. These are current as of this week for spodumene, as reported by Fast Markets. And some of the forecasts, analyst forecasts, are really compelling. So I'd just like to talk about our Manolithium project. We own an 80% stake and the balance is owned by Breaker Resources. This is an incredible project and one that we will be mining. I can say that with confidence. It's an outcropping spodumene-bearing pegmatite, the best raw material to produce battery-grade lithium chemicals. We do have a joke at site to be mindful. We have a number of tripping hazards out at our Manor site, and those tripping hazards come in the form of these outcropping spodumene-bearing pegmatites, which are literally very common. We do have a maiden inferred mineral resource here, and that was delivered and defined on the back of less than 4,000 metres of RC drilling. To give you a sense of the upside potential for this asset, we have a 20,000 metre campaign underway. And the results, which we have released to market, are really, really compelling, and on our geos are incredibly excited. The asset and the infrastructure at our disposal as well, being 100 kilometres out of Kalgoorlie, is another fantastic advantage for this project. So one for the geos, some recent results shared here. It's a really tight resource, pegmatite hosted in greenstone. So we're getting some fantastic grades coming through, 1.6 up to 1.9% lithia. We're finding that there's convergence at depth with these pegmatite swarms. Certainly the grade is increasing and pinching. And this certainly, as I look at this, is looking like it'll be open pittable. So it's been a fantastic advantage for us. The strike is significant. It's actually increasing. Stuart, our head of geology, is keeping me incredibly busy. He's finding more lithium, and lithium where he previously didn't expect to find it. So this strike is increasing pretty much on a daily basis as our results come to market. We have 3 rigs. We've mobilised our 3rd rig to site. That rig is to undertake a significant infill program. We will be announcing a JORC resource upgrade in Q4, as I mentioned. We'll continue our drilling into next year, so we'll likely have a secondary upgrade in terms of our resource in Q1 next year. There's a photo of some of our team with some beautiful pegmatite core. Again, just a couple of photos. It's an outcropping pegmatite. The diagram on the left will show you that. Beautiful spodumene crystals. There's not many gangs in this material. It's really clean. We are collecting a significant amount of core for our metallurgical test program, which will feed into our feasibility program, which will kick off next year. Just touching on Marble Bar, project we own 100% outright. Again, spodumene bearing pegmatite. This is hosted in greenstone and granite. A very similar geological setting to the Pilgangoora and Wodgina deposits to the west of our project site in Marble Bar. Again, we have a maiden inferred mineral resource here of 10.5 million tonnes at 1%. And we've got quite a significant exploration campaign underway. It's about 60,000 metres of RC. That commenced in February. We've been bringing those results to market periodically. It's a much larger system here. We've got a strike of, about 15 kilometres of lithium mineralisation through a 25 kilometre greenstone. As far as infrastructure goes, I've probably never seen a project that has better infrastructure. There's a sealed road running through our tenement package. And we're only 150 kilometres south of Port Hedland, a very famous port for not only iron ore, but spodumene concentrate as well. Again, the results here, we're getting some very good grades. The highest grades we've received thus far, 1.4s, 1.8s, and some reasonable intervals as well. So you can see the diagram on the right shows quite a significant extent of lithium mineralisation throughout the Marble Bar project site. So finishing off, 2 projects gives us fantastic optionality. We're running these hard. We've got a very aggressive exploration campaign. We've had a fantastic safety record. Safety is number 1 for us, and our drilling teams have done an outstanding job. 0 LTIs, touch wood, to date. Diamond drilling, assays and met testing, but importantly, we're not waiting to get this development team in place. We're very confident we're going to have an economic project come Q4, and for that reason, we're getting this development team in place by Q4, and the resource upgrade, as I said, will come the back end of this year. So just finishing off, again, a great jurisdiction, 2 projects, a fantastic starting position in terms of close to 20 million tonnes of inferred mineral resource, an incredibly aggressive exploration campaign, aggressive board. This infrastructure piece, I really can't overstate how critical it is. A very strong team. We're really focused on our ESG credentials, and we'll be bringing a tailored ESG strategy to market in the coming months. So we are expecting a really strong pipeline of news flow to come. And finishing off, the most valuable asset within the company is our people. And we're really attracting a best-in-class management and board, and we hope that will continue to grow. So with that, I think I'm on schedule, Chrissy. Thank you.
You are perfectly on schedule. Yeah. Thank you, sir. And I think, to be fair, that Eddie meant that first point in regards to brokers. I think I heard the word brokers come out of his word, not to us, the general public. Oh, look, people are walking up the back there. That's fabulous, because Rachel is walking up the front here. So you may recognise Rachel from your coffee cup this morning. She has an amazing job that she does with Cooper's Partners. And actually, Rachel, can you just explain quickly to those who didn't actually have a discussion with you about what you do, what it is that Cooper's provides for everyone?
Hi, everyone. We are corporate tax advisors, boutique tax area. We do private client work and also corporate work. So restructures, demergers, script for script transactions, as well as we do a lot of work around employee share schemes. So we advise directors, executives and companies on the tax implications of shares and options and rights issued to their employees. And there can be some pretty horrible tax outcomes if you don't structure correctly.
Right. Now you have to be in the room to win this bottle of Grange that she has put up for grabs. I was going to ask Shane to put his hand in because he won the voucher to Crown yesterday, but he's left the room, so he can't win anyway. So let's make it. Should you make it yourself? Go. Yeah, don't look. And if you're not in the room, you're missing out. Sorry. Look, that narrows it down to about 150 of us. That's fabulous, isn't it? Okay, first one. Oh, other side. Let's go around. Oh, Max Geo. Is Lisa Kneebone in the room? Max Geo, is Lisa Kneebone in the room? 5, 4, 3, 2, next. I'm ruthless. I don't have time. We're going to drink a clock with Stewie very soon. We may not get the Grange, but we'll get something off Stewie. All right, this one. Oh, Kirsten Meyer from Everything Metallurgy. Kirsten Meyer? Kirsten Meyer, are you in the room? 5, 4, 3, 2, 1. The boys are looking at the gate there. Oh, I don't know about that. Actually, what? What are they saying? Which one are you? Are you Kirsten or are you Max Geo? Which one are you, Lisa or Kirsten? Kirsten? Let's see your driver's license, Kirsten. You could be, I'm looking at these 6 blokes up the back there. You could have gotten any female out there and said, look, go, we need a bottle of Grange. We're going out. Let me see, Kirsten Meyer. Congratulations. Well done. We're serious. Well done. Do you like Grange?
Sorry? Of course I like it.
Fabulous. Well done. Okay, that's on shape. Okay, thank you so much. And thank you so much to Cooper. Would you put your hands together, please, for Cooper Partners and Rachel? Thank you so much. Right. Our next presentation is focusing on a new nickel province in the Pilbara. Azure Minerals is rapidly progressing its advanced stage Andover nickel copper cobalt sulfur project through exploration towards mine development. Presenting today is their project development manager, Mr. James Dornan, who has worked in project development for over 10 years across a very wide range of mining projects in commodities, both in Australia and internationally. His objective to develop one of Australia's newest nickel, copper and cobalt deposits into an operational mine. Please make him welcome.
Good afternoon, everyone, and thank you very much for sticking around for one of the last presentations for today. I'm going to run you through Azure's Andover project over the next couple of minutes. Our standard disclaimer, it'll be on our website tomorrow if you feel like a read. I'd like to start by acknowledging the Ngalama people, who are the traditional owners of the land on which we operate the Andover project. We recognise their continued connection to land, waters and communities and pay our respects to elders past, present and future. I'm very conscious that everything I'm going to show you today would not have been possible without the engagement we have with the Ngalama people. They do our heritage clearances. We work very closely with them in regards to our heritage protection agreement. We're looking forward to working with them as we move this project from exploration all the way through to operation. There we go. A little corporate snapshot. We currently have approximately $12 million in the bank and a market cap of around $76 million as of the 15th of August. Azure is in a secure financial position to continue the exploration and development programs I'll be talking about today. If you'd like further information on Azure or anything that I talk about today, please come and grab myself or one of our other key management. We're all here today and we'd love to have a chat about the Andover project. A little bit about Andover. The project was acquired in July 2020 following a decision by Azure to pivot back into Western Australia from Mexico Our Mexican assets have been sold off recently, and we're now 100% focused on Western Australia, and in particular, the Andover project. The project's the 60-40 joint venture with Mark Creasy, from where the tenements originally came from. Azure is the operator, so we're managing everything that occurs on that site at the moment. It's a nickel, cobalt, copper cobalt discovery about 15 kilometres out of Roebourne. If you want to build a mine, the Pilbara region has to be one of the best places to do that. And we are extremely well blessed with power, water, high quality roads, access to ports, and the support network of Karratha just down the road. It really is a fantastic place to have a nickel, copper, cobalt discovery. There's a lot going on at Andover at the moment as we build towards being a major copper sulfide project. So what are we doing up there at the moment? We're in the process of defining what we believe is a new nickel, copper, cobalt province in the Pilbara. The Andover project's extremely target rich. We've got a long pipeline of targets that we'll be following up over the coming months, and I reckon we'll be there for years to come in terms of drilling and exploring. Then one of our key focuses has been on building our knowledge of the Andover project. We've only held it for 2 years, and in that time we've made a discovery. We've drilled that out to mineral resource estimate. That was a great start, but the knowledge of the Andover complex itself is what we've been building up over this winter in particular. And I'll talk a little bit more about that in a second. We continue to explore while at the same time doing all the studies that we need to, if we do have an economically mineable project there, to actually press the button on it, go to the EPA, go to the other regulatory authorities and actually seek the approvals that we'll need to mine it. So these are long lead items such as flora and fauna studies that need to be done over multiple seasons. So they're multiple years of studies, and we've started those already. We've done our first round of flora, fauna, Stygo, Troglofauna, a whole range of different studies to actually get a good head start on that so that we are ready to move the project quickly through the next phases. There we go. This is where we started. So the Andover deposit, we've published a mineral resource estimate earlier this year. It's a really great start for us. It's 4.6 million tonnes at 1.1% nickel, 0.47% copper and 0.05% cobalt. So a nickel equivalence grade of 1.41%. It gives us around 75,000 tonnes of contained metal. As I said before, it's a great start. It's a robust, continuous, homogeneous resource that we've got there. And metallurgically, it floats really well. We've done initial met test work on it. It looks like it's going to be really easy to mine as an underground mine. We're advancing this through each stage as if we're going to operate the project, because we do believe that we are on the pathway to developing the Andover project. I mentioned that the Andover deposit was a great start, and just around the corner, we've also outlined the Ridgeline deposit. We're working through Ridgeline at the moment. It's adjacent to, so within a couple 100 metres of the Andover deposit, and it's along the same mineralised corridor as the Andover deposit is as well. It's approximately 150 to 200 metres from top to bottom, about 100 metres in length and 20 to 30 metres in thickness. And it has a central core within it of about 6 to 8 metres of higher grade mineralised material. Drilling at Ridgeline's been completed, and like a lot of our peers, we're restrained at the moment by assay turnaround times, which are between 8 and 12 weeks. Give you an idea of some of the drill holes that we've got through there. We've got everything from about 2% through to almost 5% nickel grades. This is we're expecting this to be a higher grade deposit than the Andover deposit. It's shaping up quite nicely, and we're looking forward to moving this through the same phases that we've done with Andover. So completing a mineral resource estimate on it, completing the metallurgical test work, and then moving it into a scoping study level. So in terms of what we've done at the Andover project so far, we've very much only just scratched the surface. I mentioned earlier that we were very lucky to get straight onto the Andover deposit and drill that out to mineral resource estimate as well with Ridgeline. It's a great start. Our geology team's been extremely busy over the winter period, so those cooler months in the Pilbara are just so valuable. We can get teams out on the ground exploring for the next targets that we'll be drilling out over the coming 12 months. Just very briefly, while I've got this slide up, the 4 discoveries to date, Andover, Ridgeline, Seaview and Skyline. They're along that same mineralised corridor that I've been talking about so far. We've got a lot of targets still to be following up. So Atrium, Woodbrook Pipeline, VCs 24, 30, 31 and 32. They're all short-term targets, things that we'll be putting a drill rig onto in the very short term. Look, if there's one slide I'd like you to pay attention to today, it's this one. It might not seem the most, exciting out of them all, but this is really where we're building the value in Andover. That knowledge base of knowing where to put a drill rig is just going to be so valuable over the next 12 months. We have a highly dedicated and skilled team led by Graham Lever, our exploration manager, supported technically by Dr. Josh Coombs, and we have an excellent field team established in Roburn. So a full core shed up there and all the support infrastructure that we need to continue to explore there. We're developing a really robust understanding of the geology, the geochemical and geophysical signatures that define the Andover deposit. We're finding elsewhere within the Andover complex itself. We have extensive outcropping. So up there, a lot of you would be very familiar with the Pilbara region. There's not a lot of cover. So if any cover at all. So our geologists are literally walking across the ground, kicking rocks, finding rocks, sampling them, and that geochemical signature is leading to more targets that we're continuing to follow up. It's a fantastic place to go exploring, because if you have to do it undercover, you're talking about millions of dollars to do what we've done over one winter, and you're talking multiple years to get to where we are. So I've covered off the exploration side of things, and that's very exciting. That's going to be what we're going to be working on for the next few years. It's been a great start. We've got a mineral resource estimate at Andover. We've got Ridgeline coming. We're also working in parallel to make sure that not only are we finding the nickel, copper and cobalt in the ground, but we can actually extract it. So we're doing all the metallurgical test work that I mentioned earlier. We're doing the mining studies, geotechnical studies, and as I mentioned, we're already well into the environmental approval process by completing all the flora and fauna studies. We really are running 2 parallel programs here. We have the exploration program led by Graham Lever, and then myself leading the project development side of things. It couldn't be a better place to actually build a mine, and it just makes my life very easy. I'm looking forward to actually physically getting on the ground and doing it over the next few years. We are very conscious that we're going to be developing a greenfield site. It's a beautiful thing to have. It's just an absolute clean sheet of paper to do what we need to. ESG principles are going to be key to delivering a project that's financeable, but also we believe there's going to be a premium for nickel, copper and cobalt that's got good ESG principles behind it. I can see a lot of our concentrate being sold into Europe with a passport, and that concentrate passport, you'll be able to click a QR code on the side of the container and you'll be able to see which mine that concentrate came from, who the traditional owners are, the ESG principles of the company, and we expect that will get a premium in the market as well. Lastly, I spoke about the dual pathway to grow and develop the project, and that's the key strategy of Azure, is not only to find it, but also to be able to develop, build and operate that mine to extract what we do find. We'll leverage for success, strong balance sheet. We've got $12 million in the bank. That will fund our exploration and development programs, as I've explained them today. Strong growth platform with plenty of knowledge built up at the Andover project over the last 2 years, and a lot of targets still to come. We've got continued exploration success based on that knowledge and what we've managed to do so far, and an excellent management and technical team to support all of that. We've also got some very supportive investors. Mark Creasy obviously being one of the bigger ones with 40% interest in the project, but also one of our key shareholders. Just like to thank you for today, and
expecting bells and whistles then. It was a very, very reserved out, wasn't it, everyone? Yeah. Okay. Thank you so much for coming. Thank you, James, for taking our position of the second finite position today. We appreciate it. He is a tragic Docker supporter as well. So let's hope you've got a bit more exuberance on Saturday night. That would be fantastic. Right. You know, we've talked about Eddie Rigg a few times today. He's the sort of bloke that you can't but stop talking about, can you? But when he made that opening presentation to us this morning, one of the facts he pointed out that we all needed to understand was that the metal intensity going into energy delivery in this new age is huge. It's so much bigger. EVs need 3 times more copper. To build a wind farm, you need 9 times more minerals than you do for a traditional gas-fired power station. So for us, that's great. It means there's enough scope for us to make some serious money in New World metals to make that growing appetite. Our last speaker today wants us to look at the way we can really capitalise on the riches that our state has to offer. So to finish the first edition of our New World Metals Roadshow and summarise the day for us, and you're more than welcome to ask him questions. He's happy to take questions at the end. From our corporate sponsor, CRU, would you please welcome Alex Tonks?
Thanks, Chrissy. So I'm going to try today just to put in context what many of the projects you've seen and heard today could mean for Australia. Hopefully I can move the presentation forward. Okay, so really I'm going to touch on a couple of, or 3 key areas. The first is really how CRU as a forecasting agency thinks about EV demand and also decarbonisation. Second is really what some of those trends are going to mean for Australia's exports in terms of volumes and price. And then lastly, the potential for Australia to really add more value and move downstream and I'm going to highlight just lithium as an example. Just firstly, just for background, what does CRU stand for? Commodity Research Unit. The firm's been going for over 50 years. We've got about 350 analysts based around the world in most major mining jurisdictions, generally covering individual commodity markets as teams. We also have a consulting division, which I'm actually based in. Much of the work today that you'll see, some of it comes from the analysis division, which are doing the supply, demand and price forecast, but also some of it comes from the consulting division. The consulting division really takes a lot of that data and that information and seeks to apply it to specific circumstances, and we support either producers, consumers, banks or governments in the space. So just to, I guess, set the scene, we have a pretty unusual commodity environment at the moment. Here we just have a heat map. This is last year's average prices versus this year full year forecast, I should say. Obviously not much of a forecast left, but what you can see is that the basket of commodities that CRU forecast and track are really in pretty unusual territories. You know, the unusual thing I think about this commodity environment is that almost every commodity market is extremely tight. It's not just the supply side issues and what's been associated with the war in Ukraine. We obviously have a pretty significant demand side shock from what's been very, very loose monetary policy over the last couple of years. Normally this chart would be a lot more balanced, if not bearish. And clearly we have some standout performing commodities in fertilizers and also the battery space as well, which I'll focus on. So I'd like to touch on some of the longer term issues today. Clearly we have a very tight market today, but some of the issues we're seeing that we've seen today really do extend into the long term. And I guess one of the first comments I'd make is that geopolitics is likely to play a much, much greater role in the metals markets going forward. Previously geopolitical impacts were really isolated to oil and gas markets. And as a person involved with bulk commodities and base metals, we haven't had to think about it much for the last 20 years, and that's really going to change quite significantly. And the second driver obviously is energy transition. Obviously, as we seek to electrify transport and reduce the reliance on oil and gas, it's going to place a huge load on the grid, and particularly things like copper and aluminium. Of the commodities that we track and that we cover here, what you can see is that today, many of those markets are in actually quite high levels of stress already. And a lot of the markets that are really required to support energy transition into a low carbon future are very, very small commodity markets, and they're already seeing stress from either things like processing risks or geological constraints already. Copper, nickel, cobalt, rare earths are particularly at risk, but also lithium, which I'll talk on today. When we think about many of the transition targets that have been announced and the net zero 2050 targets that have been announced and set, it's clearly an irreversible trend. The challenge, obviously, from a forecasting agency perspective is that really how we get to net zero in 2050 is not particularly clear. And you can see quite a lot of variation potentially in how those targets might be achieved by region, and they could move quite significantly over time as well. So to help overcome that, what we've done is develop what we call carbon abatement curves, very, very similar to, I guess, the construct of a cost curve in metals and mining. And what we have here is two abatement curves, one for Europe on the left and China on the right. And really the size of the blocks is the level of emissions that could be abated. And the vertical axis is reflecting the cost or the CO2 price incentive to change that technology to a low carbon source. And so these are based on estimates of upfront CapEx and OpEx to convert that technology. And what you can see is that outside of efficiency gains, that light green on the left-hand side, there is a cost to changing to low carbon technologies across the board. The key point though, really here is that if you look at those cost estimates, what we see is obviously decarbonisation in the grid, using wind, solar, etc., are very low cost relative to other sources of decarbonisation, particularly in Europe and China. EVs, slightly higher cost, but nonetheless, we know the take up there, and I'll talk on that later. But if you look about the right-hand side, what you can see is that decarbonisation in areas like steel are actually extremely high cost. And so that's why really we know, at least with some level of certainty, that the rollout of solar, wind, etc., and EVs is going to continue at pace. So if we take that forward, and here what we have is the compound annual growth rate of our forecasts from current to 2030. Now, obviously, Australia's mineral exports are clearly dominated by iron ore, then thermal coal and metallurgical coal. And we have forecasts for those commodities effectively flat to negative going forward. I should add, though, that Australia's role in those markets is not going to change a great deal. We have a substantial position in those markets that is fairly robust. And I should also add that new projects in those markets, despite a fairly flat or negative demand profile, will still be required because of mine decline. And Australia obviously has a very significant role in iron ore, and always will because of its cost position. And similarly for thermal coal and met coal because of the quality of coals that are available to Australia. But if we look on the left-hand side, clearly from a demand forecast perspective, we have a very, very different profile and a huge opportunity in things like lithium, cobalt, nickel, rare earths, vanadium. Putting that in a global context, we have the anticipated market size by value. So this takes into account our price forecasts now versus 2030. And clearly, the major bulk markets will shrink in size and value, whereas the smaller markets are set to grow quite substantially. The issue on the right-hand side, though, is if you take that forward into Australia's exports, think about this as a terms of trade, really is that whilst volume perspective, we're going to maintain a fairly significant position in iron ore and coal, we are likely to suffer from quite a significant terms of trade shock from a decline in the iron ore price. We do have much lower iron ore prices than today in the long term. If you look on the right-hand side, what we've done is take forward all the known projects in commodities like lithium, copper, nickel, and vanadium, and put our long-term price to those. And whilst we're very bullish on many of the projects that you've heard about today and are likely to be developed and go forward and also benefit from quite high prices, the reality is that as they stand exporting unbeneficiated products, they're going to struggle to offset any terms of trade shock from iron ore. So just to go into a little bit more detail about the demand side, clearly the EV story is what's going to drive lithium. It's about 84% of all lithium demand growth, and it produces around about 20% compound annual growth. As I mentioned, we do have, I guess, a fairly high degree of confidence in that forecast, and we really are past the inflection point now. We've seen sales of EVs up globally over 50% last year and up 93% so far this year. When we look in a little bit more detail about that forecast, though, it's important to note you are going to see some differences occurring in the lithium market. What we have here is the share of cathode technology going forward, and what you can see is that LFP in the yellow there maintains quite a big share, and that's predominantly because even though it's got a lower energy density, it's not as good a performing battery as NMCs. It is cheaper to produce generally, and therefore likely continue to dominate its market share in EVs in markets like China and India. Whereas the NMC, particularly 811 technology, is likely to gain share quite substantially in markets that are prepared to pay for that, like the US, that have longer distances, etc. And what that means is for Australia is that it's pretty positive because NMC effectively uses hydroxide, and many of the Australian producers are obviously going into that market. And that's why we have a higher demand forecast growth rate in the outer years for hydroxide versus carbonate in lithium. So obviously the miners, and many of the stories here you've heard today are well aware of that and have responded and have seen a fantastic supply side response from Australia into that market. By full year average forecast for this year, we'll likely see an increase in export volumes of about 85% already. And that's likely to continue in our view. But really the key question here is, can Australia add value and move downstream? And we are already starting to see this process in lithium. But from our viewpoint, there really is an opportunity to move downstream in cobalt, nickel, rare earths as well. Conscious that those processing routes are complex, but the reality is almost all of those minerals, 90%, is processed in China. And so while Australia has shied away from moving downstream in the past, particularly in bulk commodities, given the lower margins that are available, we do think it's worth pursuing in the battery value chain. If we look at lithium on the spodumene side, clearly Australia is very competitive. No surprise, we're good at digging up dirt. But what I would say is that we're also very, very competitive in producing hydroxide. And, you are starting to see more hydroxide plants get talked about. And certainly from a CRU perspective, we think it makes sense to do a lot more of them. If I can just show you what today's hydroxide curve looks like here on the left-hand side, we have today's 2022 hydroxide curve with demand overlaid. We know it's a tight market in lithium at the moment. If we were to take forward our hydroxide forecast, this ignores the carbonate story, it just talks about hydroxide on a carbonate equivalent basis, I should say, but is purely for hydroxide. In 2030, you can see the level of demand and how many hydroxide plants are going to have to be built to balance this market. It's extremely tight. Most commodity markets, even in 2030, you're looking at generally seeing long-term prices balanced around the 90th percentile. This market is very unusual in how rapidly it's going to have to respond to the demand side. But what I would say, and what's really important, is on the right-hand side, we have the value of those exports. So this really assumes that all known projects today, and I would stress that in lithium, particularly Australia is, substantially underexplored. And there's, obviously upside to that story. But just assuming that all known spodumene projects come on and are built in the next, by 2030, really the value of exporting pure spodumene, you can see, is pretty low. As I mentioned, it's really not going to provide any offset to a decline in iron ore prices. But if we can take that through to hydroxide and value add through that means you end up with a much better industry, just shy of about $10 billion in exports. But assuming, and it's a bold assumption to assume that you can actually produce an NMC battery in Australia. There are various debates happening around this, but if you assume that you can produce batteries and you can turn all of that hydroxide that's available in Australia into an NMC battery, we've assumed 811 here, you can end up with an industry here that's just around $30 billion. And just to put that in context, that's bigger than the thermal coal exports in Australia today, and it's comparable to met coal exports of Australia. So that's available really in the next 8 years or so. And so, we'd stress that really for Australia to benefit from this boom, and it clearly will be a boom, we haven't seen growth rates like this in the commodity markets really since the early 2000s when China was doing, plus 40% FII. That to really capture that though, Australia really does have to move downstream. We'd stress that the level of vertical integration you're likely to see in some of these commodities is going to vary. And really, the economics of moving downstream could be further improved by lowering power prices, and also things like reductants and reagent costs need to be looked at. But I'd stress that, in the geopolitical environment that we're facing, a move downstream is going to be very critical for Australia. I'll leave my comments there, but happy to take any questions if there are any.
Nip down, if you can give us your name and then your question, please.
Jeff Marley. If it's going to take this producing extra stuff, it's going to take a lot of infrastructure. Is the infrastructure going to be more than the profit that people are going to drag out of it?
Look, there's no doubt this sector is capital intensive. And, the mining industry here has been very, very high return because we've benefited from mining commodities with very steep cost curves like iron ore and coal. The returns that are available in downstream processing, generally speaking, are lower. The cost curves are flatter, if you like, so the returns aren't quite as high. But what I stress is that when you're looking at demand profiles like that, if you're building high cost assets, it doesn't matter so much. There's plenty of examples of where people have actually bought and operated high cost assets. If you have a very strong demand profile, you can still get a very good return.
Alex, thank you very much. We really appreciate your time today and shoring up the final end of our first day, our first show in our series, isn't it? Oh, who did that? Do you need a drink, sir? Okay, you think you might do it. Would you put your hands together for Alex, everyone?
Thanks again. Cheers.
And thanks to all of you. We're really pleased to see the numbers for our first New World Metals investment series. The interest in the potential of the electric age and how we can tap into it's huge. And we really knew while we were putting this event together that the demand for commodities, demand for investment, knowledge was going to be pretty big. So we are going to be in Sydney on the 22nd, 21st, I think. We're going to be in Melbourne on the 22nd of September. So that's the Thursday before the AFL Grand Final. So if you are a Dockers tragic and things don't work out for you on Saturday and yet you still have your ticket, don't throw them away. Come and see us. We will feed you, we will entertain you, and we will educate you a little bit more. We'll be at the Grand Hyatt. Our next local conference is down in October. It's our Southwest Connect. It's 3 days. It's a mixed conference. It's really interesting. And we've got a lot of people who fly in from the East Coast because we have the direct flights, so brokers and exhibitors, etc. Join us for that one. And if you'd like to know about any of our other conferences, then you can jump onto our website, Vertical Events, and that's where we'll be putting all of these presentations as well in the next few days. Did you enjoy yourselves?